Okay, so we've covered a lot of theory, looking at some nice perfect line diagrams. Let's see how we can put some of that theory into action on the real chart. So here is euro dollar on the daily chart. So essentially what we're going to look at now is basically as if we were trading a strategy by entering on the M15. So remember when we went through the sort of high level trade plan at the start of the liquidity module, where we basically are using that 3 time frame philosophy. Well, in this case, we're going to be doing it through the lens of what we kind of classified as that swing trading strategy, right? Where the daily is your higher time frame. So just looking at, are we in the pro trend daily run, or are we currently in the daily pullback phase? And then using the 4-hour chart as our sort of main time frame, our immediate bias. So that's the ideas that we're going to be trading. That's the 4-hour POIs that we're going to be trading, but we're going to be using the M15 to enter those 4-hour zones. Okay, so these gray boxes will be our 4-hour zones, and once price mitigates them, then we would drop down to the M15 to look for our lower time frame entry models, utilizing all of the stuff we have just gone through. Now we're going to go in this through that sort of approach in a lot more depth in the putting it all together module very, very shortly. But I thought we'd go through kind of one example before we kind of dive deep into that. Okay, so daily chart, let's kind of, without really overanalyzing things, we can see we were in a bearish trend for quite some time. Okay, and then we had a bullish break of swing structure over there. So I kind of just like to map my most recent, say 1 or 2 swing breaks of structure, just to paint the story so we know where we're at. That was the last, bullish break of structure that we had over here, okay? Now, since we had that initial break of structure, we haven't really had what I would deem to be a significant swing pullback relative to recent price action. If you look at the size of those swings, right, sort of these big pullbacks in price, this one's a bit arguable, right, a bit debatable. I just personally classified that as an internal pullback, but if you want to classify it as swing, it doesn't make a big difference. Okay, so really, we're just kind of having that internal structure to the upside. That would be kind of our last, if I draw them on, probably a bit better, wouldn't it? Sort of being lazy. Just use this for now. Okay, and we can see those internal breaks of structure there to the upside, and you can just see that sustained bullish order flow on the daily chart, right? So that would be your daily internal range there. So in terms of immediate demand zones on the daily chart, right, we've got essentially this sort of small daily demand range there, which you can refine to, you could have it like that, or obviously refine it to the pivots within that. You've got the extreme, had a slight mitigation, so price could always come back, or you could revolve it to that daily inside bar there, which you've had a bit of a reaction from. And it looks like we may be continuing that bullish order flow to take out this high. If we look left, are we reacting off anything? That makes sense. Yes, we have a clear unmitigated daily supply zone over here, which obviously led to a break of structure, strong momentum out of it, and was unmitigated until price returned to it. And we did have a subtle sweep of liquidity in there when it formed. So it was a sweep zone too. So that's a pretty nice POI. So remember what we said, when structure shifts bullish and order flow is bullish, what do previous, old unmitigated supply zones become? They simply become reaction points for pullbacks, right? So i.e. when we reacted here, what we're reacting off, supply to the left. What we're reacting off here, supply to the left, right? So yeah, you should hopefully kind of know that lesson by now, right? Once we're bullish, old supply just simply becomes reaction points for pullbacks. Of course, at some point we can mitigate that and have a much deeper move. We could even break structure, but our expectation, if we're looking for shorts from within the supply or trying to trade through it, is that it should be a pullback into demand before continuing higher, right? And that's the cycle that we expect until structure actually moves, okay? So really that's as far as I'm gonna analyze the daily chart at this point. On our higher time frame, we are heavily bullish. Order flow is pretty bullish. Since this probably last true swing break of structure, we haven't had a sizable pullback just yet. So that would be in the back of my mind that we could see that deeper pullback soon, and this internal structure could shift bearish, right? And we could get the order flow shifting bearish to facilitate the larger pullback. But until that happens, I don't want to assume that it's going to happen straight away, right? We can just keep following this, because especially when you get that first initial trend change, after such a long sustained trend, very often the momentum is going to be quite strong, right? As all of those shorts positions start to unravel, and that's when you see momentum often very strong, and you won't generally get deep pullbacks at the start until a little bit further along, okay? So yeah, like I said, that's the daily chart. Order flow is heavily bullish. We have pulled back into this demand zone and are potentially pushing higher. Something to note though, there was no inducement in that leg. So yeah, we'll have to see if this POI is going to hold. So that's kind of just the daily perspective, the high time frame perspective. If we jump down a time frame onto our 4-hour chart, I'm just going to delete these daily internal lines for a minute, and you'll see that they basically line up with where our 4-hour swing structure is. So if I just look at where the most recent 4-hour swing boss, it would be this pullback here, okay? That would be my last 4-hour break of structure. So where is the current swing low? It's the lowest point that broke this high, right? Drag the box from the high to where it was broken, drag it down. The lowest point in this box, that becomes your new swing low, right? Because that's the lowest point that broke the high. Hopefully we should all be very comfortable with that by now, okay? And now you can mark out your 4-hour strong swing low. Cool. So that obviously means this is our 4-hour week swing high. We have had a sizable pullback since then. So now you know what current swing range we are within. That's always the first thing you want to do. Every time you go to a new time frame, first thing you want to look at is the swing structure, right? What swing range are we in? And you can look at what internal range we're in and just get your structure mapped. And then you can start to think about your supply and demand, and then obviously then refine that with your liquidity concepts, okay? So that brings us, oops, don't worry, I jumped off, to there. So that's our structure. In terms of internal structure, it's not really too clear. We've kind of come down and broken that low, but then we've just been messing around. This whole price action, if you look below, this is the end of the year, right? December. So typically you'll see that where there's no real direction because there's not a lot of institutional volume going through the market, right? Markets are very, very quiet, understandably. So I wouldn't read too much into this. Now, as you can see, these big boxes are daily zones. So we've had a mitigation of daily supply. We've pulled back into that daily demand and we're starting to make our way up towards that week high. So the simple assumption would be that this 4-hour bullish order flow would probably continue, right, until it takes out that high. Then we can map out the new range and look for price to come to the downside. So let's just play this forward a little bit. Okay, and now we've had a strong movement down, okay? So that's not overly surprising because remember on the daily chart, there was no inducement in the leg. So this POI has ended up failing, well not failing, but that initial reaction has failed and now we pushed in lower. So let's see if we can potentially look to try and capture this swing high low if we draw on our 4-hour demand zone. Now, I'm just gonna hide this daily zone for a minute just so we can kind of keep it nice and clear on what we're looking at, okay? So quickly going back to the trade plan, the 4-hour chart is our medium time frame. So we are essentially pulling back to one of these levels, okay? And we're looking to try and capture that 4-hour swing high low to try and capture that next movement to the upside. So when price mitigates our 4-hour zones, right, our medium time frame zone, we then want to jump down to our lower time frame and follow, and we'll see if we can get one of these liquidity entry orders, right? That's what we're trying to do at the moment. So if we've come into our 4-hour zone, do we have any inducement in the leg? No, we have a particularly big straight push, right? So that always makes me wary. So this is where I put on one of those hollow boxes to show that there is no leg inducement to the left. So what do we need? We need it built to the right, okay? So let's jump down to our lower time frame, which is the M15 in this case, and see if we get our entry model, and it would be super helpful if the 4-hour zone would appear on that time frame, which hopefully it should do now. Cool. Okay, so we're selling in with a lot of momentum. And at this point, what do we need? We need to see some liquidity built. So whether we're going to get something like this, right, where we get some nice obvious equal lows, then we get a sweep of that low, right, and then we get the point before the liquidation fails, and then we get the entry. Let's see, or if we get one of the fake breaks, let's just see what develops. Because right now, all we have is a straight movement in and a pullback. There's nothing going on, right? So just be patient and let's see what develops. So we're pushing down, and then we trade through the zone, okay? So the moment that price trades 1 or 0.1 pips through the zone, that zone has failed. If the zone is going to work, there should be enough demand within here to contain price. There should be enough orders to contain price, but it hasn't. Supply has overpowered demand and we've traded through, okay? So when that happens, don't just sit on your execution time frame, right, looking for an entry. Reassess what your medium time frame is showing you, because that's the most important thing. Okay, and we can see we pushed through. So that's not really too surprising, is it? Because when there's no inducement to the left and then nothing is built to the right, what do we know? Very often which is this scenario here, very often the low itself will be used for that structural liquidity, that strong liquidity behind the low, right? And that's what it looks like it may be happening in this instance, okay? So potentially what you could look for then is the entry model when that low gets swept, which would be this one here, right? Liquidity entry model 4, which would be sort of, I've said it's high time frame, but essentially I mean, that medium time frame POI sweep, i.e. this being your lower time frame entry model when that happens, okay? Now, the thing that's interesting about this specific scenario is that, basically when you trade liquidity entry model 4, the reason why we don't sort of advise you start out with it and you concentrate on these ones is because the higher time frame, or to be more accurate, the medium time frame demand, in this case the 4-hour demand, has failed, right? Price has traded through it. So the reason why this entry model is a bit more risky or tricky is because you're not actually trading the demand, the POI, you're trading the sweep of liquidity. And when that happens and price comes down here, like I said, it can just be a quick sweep and then, we switch bearish. Structurally, we shift bearish, demand has failed, right? And then you're trying to get long. So it can be a lot lower probability and we never know how far that pullback's going to be. The thing that helps this entry model in this specific price action scenario is if you actually look at the demand, you have essentially this larger demand range, right? This larger pivot. And if you just kind of adjust the zone a little bit, you can see that price is still contained within here. So it's messy, it's not ideal. I much prefer to be trading from full, candle pivot POIs like this that are completely are mitigated, because if you refine it down to this candle now, which price is trading from, right? Trading from within this wick, I'm not as big of a fan of it, because what happened is when this demand zone was created here, what happened? Price initiated out, or at least trickled along and it's filled some of the orders. So it's not, arguably some of the demand within this zone was used to fuel that move. It's a bit of a tricky one because price kind of is just efficient and then moves. Okay, so it's not as ideal as if you're trading from a completely unmitigated pivot zone, okay? But if this happens, this is where I'm happy to read between the lines a little bit, right? We're still within the zone here. There can still be plenty of demand within this wick. And also we now have essentially a sweep of the liquidity behind that low there, right? So now, if we are trading essentially, the high time frame leg POI sweep entry model, we need to look for the point before the liquidation, the supply that caused the liquidation of that low, and then look to see if that fails, okay? So let's jump down to the M15 and see what we can see. So obviously the 4-hour chart dropped the head a little bit for us there, but now I've adjusted that 4-hour zone, right? To, as we just saw, we have now, that gray line is that 4-hour low. So if you want to be super mechanical, you always want to pick the nearest one, and it's going to be down to you whether you want to pick the pivot POI, right? So the candle pivot POI like that. Or if you always want to take the nearest and include fractal zones with that. And what I mean by fractal is wick zones, right? Buy to sell wick zones. So that would be technically the most nearest zone, the point before the liquidation that broke that low, right? So you could take the buy to sell wicks or that full doji, and you would look at that as literally that was the last supply that came into the market to break that low there, okay? Obviously, if you wait for the pivot supply to be broken, then that would be a bit more conservative, okay? So this is going to be down to you, what you want to test in your plan. Usually I recommend always going for the more conservative approach. Hopefully you've kind of noticed that throughout this course. Whenever there's like options for how you want to mechanically do something, I'll usually say, well, this is the slightly more aggressive way, this is the more conservative way. Start with the conservative way, and then you can add in the aggressive way if you want. This one, I'll leave it up to you, because the thing about doing the more quote unquote aggressive way by looking at, like essentially the wicks, or if you want to take the buy to sell wicks like that way, the reason why that can be a bit more useful is just because it's a little less discretionary, because you will always be looking for the nearest one here rather than going, is it the one up here or is it the one down here? So let's just stick with that for now, okay? So that would be the point before liquidation. So before considering any liquidity entry model, you would need to see that fail, okay? So price pushes deeper into the 4-hour zone, right? And then we react to the point before liquidation, and then we push up. So now at this moment, you see how you've had a reaction to the point before the liquidation, that supply, and then we, and then we pushed up. So now you have that supply to demand flip, right? From the higher of the reaction to the lower of the reaction, or you could refine it to the pivot candle there, okay? So at this moment, what do you have? You have the essential model, because we looked for that liquidation, which was of that 4-hour low. We identified the nearest level of supply, the point before liquidation, and then we've seen that fail. And because it flipped it, you could now look to enter on the flip. The thing that was better about this scenario was that we didn't just trade through all of the demand and break that low, which makes it a bit trickier. But in this scenario, if we go back to the 4-hour chart, all right, remember we had kind of even more demand. That still makes sense. The price could at least give us somewhat of a reaction because, it's not a fully unmitigated candle, so it may not be the move that does that, but it may give us enough of a reaction up to supply, right? Okay, can we trade this? I would say no, because what we don't have is we don't have a change of character yet, okay? Structure has not yet shifted back in our favor, and that would be the change of character that we would need to see go. Or if you wanted a little bit more confirmation, you would wait for the bullish IBOS, okay? Because we had a bearish IBOS there on the M15, but yeah, you can see it's just basically you would want a bit more of a significant break there on the M15. So at this moment, we have the liquidation. We have the PBL fail, the point before liquidation fails, which flips to demand, okay? So we're looking at entry model 4, but we don't yet have structure shifting in our favor. So this is what you need to wait for, okay? I need to wait for at least for that to break. So price comes back in, holds the demand that flipped the point before the liquidation, the PBL, and now we get our change of character, okay? So now it would be valid to trade liquidity entry model 4, okay? Because we've had everything. We've got the liquidation, the point before the liquidation, that supply has now been failed. It also flipped. We couldn't enter on that flip because we didn't have the chalk yet, but now we have the chalk. We also have a demand chain forming. So this is your unmitigated extreme. This is a level we could enter. So that would be your valid M15 entry. Again, we'll talk about how you can refine your entry, but for now, we'll just assume we always enter on the edge. And then let's just say, you target 5R, keep it nice and simple. If you want to wait for a little bit more, you could wait for that high to go just to get a bit more confirmation. You don't have to, it's up to you. Okay, and then we're at this point here. Now, the interesting thing about, before I play this forward, about this particular setup, okay, is that there was also, I believe, another potential sign that we could use in terms of inducement, because remember what we said, there was no inducement in the leg, and we built nothing here, so the low ended up getting used, right? But then you could ask, does any of this count as inducement? And that's a good question, right? I would say, well, yeah, but how do we know if the liquidity has been used, the sell side liquidity below these lows, for BFIs to buy against? Like, how do we know it hasn't already been used and failed? Well, what you do, remember, is you mark where that low was, okay? So the reason why we could potentially think that this is strong liquidity, right, is because this low went on to break some of these highs, okay? So we know that would induce market participants to generate strong sell side liquidity below that low, okay? So that's where that liquidation occurs on the 4-hour chart. So if we jump down to the M15, all right, and we drag the liquidation line across, okay, where did that low get liquidated, that gray line? It's the last, the nearest zone, right, the point before the liquidation. So there's your break. That would be it, right? Because at this point we've already broken, so it can't be these buy to sell wicks because we've already broken and then you get that supply. So this is the PBL here, right? And this is what I mean. If you use those, this is what I mean by a fractal zone, buy to sell wicks. If you always take the nearest one, then it can help you just to be a bit more mechanical. There's less discretion saying you want the more significant one higher up, okay? But we'll talk about this a lot more as we go through more and more examples. So that would just be another confirmation now that inducement that we spoke about on the 4-hour chart, right? All of these lows here, that price has now managed to come up and break the PBL of that liquidation. So it's just even more confirmation now that BFIs are using that sell side liquidity to make the move to the upside. So that PBL fails, but obviously there's no flip there, so we're not going to be looking to enter. We can just leave our entry order down on this one, the original one down here, okay? So again, this long here is essentially playing this setup here, but we've already basically had this flip ended up mitigating something down here, right? And then we've had a continuation of that. So we're just looking to enter on the chain of it because we needed to wait for the chalk. So yeah, so hopefully that all makes sense. And then you would get tagged in, chops around, Asian sessions quite slow. And as we come into London, end up hitting targets there for 5R, okay? So literally that was a case of we had our 4-hour zone, all right, pro 4-hour trend, pro daily trend, looking for a continuation. There was no inducement to the left and nothing was immediately built near the POI to the right. So the liquidity of that low ended up being used itself. We mitigated deeper into that demand range. So that helps playing the sweep of that low. Okay, so that gives even more confidence to trying to trade this entry model because it's quite a tricky entry model, right? Because demand essentially fails, but in this case we had some more demand, so it helps. And then we looked for the PBL, the point before liquidation, what caused that low to fail, and then we look to see that the PBL fell. I appreciate there's a lot of acronyms here. The point before the liquidation fails, and then if it flips, we can take the flip. If it was a straight push, then we could just take the extreme. But in our instance, when the PBL failed, there was no chalk until a little bit later. Okay, so again, jump down to the M15. That's where the liquidation occurred here, that grey line. That was the most nearest level of supply, right? The PBL, the point before the liquidation. Price comes in, reacts, pushes up. So that would have been the flip, right? That caused the PBL to fail, but we didn't have a change of character yet, so we needed to wait for structure to shift on our side. And if you were a little bit unsure about the setup, because obviously you're trading against a lot of momentum, the 4-hour pivot demand zone failed, you're not quite sure, boom, right? Bring it back to basics. What are we trying to do here? We are trying to follow the footprints of the BFIs in the market. Where are they entering in the market? Where are they causing those overwhelming imbalances between supply and demand? That is exactly what I want to see. That gives me loads more confidence to get involved, right? If we're kind of just trickling down with a ton of momentum here, and then that zone fails, and okay, yeah, maybe you can see an entry model. It's like, okay, maybe, but then when you see that, okay, now I'm really interested. So then we just enter on the unmitigated extreme. And if you also notice, what was even great about this setup was, let's say you didn't want to be as aggressive with defining your PBL, and you want to take the more conservative and obvious pivot supply zone. See how that's where the direct flip was of that. So then this became a really nice POI. So there's a few different ways in which you could have potentially viewed this setup, but it all pretty much you arrive to the same conclusion, because you wait for the change of character, you waited for the supply that caused the liquidation to fail, big V-shaped reaction, set your entry order, right? And there you go, okay? So if we jump back to the 4-hour chart, let's see now if we can target that new higher high, or what happens next. Okay, so we start to push down. So this looks like it's going to go and it's going to fail, which makes sense. The 4-hour internal structure is now obviously staying bearish. This low failed to break any structure, and now we've come down and targeted it. But 4-hour swing structure is still bullish, and there is still one last unmitigated zone at the low. Okay, so there's potential that this low could hold. So if we look left, right, there's nothing unmitigated within here. You see how like these are all fully mitigated already? Okay, all those zones, there's nothing left. So what happens is, when you have all of those series of mitigations and you have that demand chain, they're all structural lows, right? So what will be behind those lows? You guessed it, there will be available strong liquidity, right? Sell side liquidity below those lows. Okay, so now there's cause for lower prices. This is a weak low, it's failed to do its job, so price is going to want to run that. There's no more demand into the extreme, and there's all of this internal range liquidity to take out until we come down into that strong low, okay? So if the 4-hour structure, this large structure here, is going to continue bullish, this has to hold. This is the last line in the sand. So this becomes even higher probability for that to happen. We can also see that was a sweep zone. It swept the liquidity behind that inside bar, and then these lows here as well. So it's just another strong sign about, we saw that earlier, right? Those ranges are correctly formed, let's say, when they form through sweeps of liquidity. We know that adds to the possibility that this is a strong low, that there was BFI involvement in the creation of that swing low that then led to the break of structure. Okay, we then have all of this potential inducement to use, right? That available internal range liquidity as price comes down in towards our POI. So what would you do? Your medium time frame, set your alert, your POI, wait for price to come in, and then when it mitigates it, then you can jump down to your lower time frame execution, but not until then, okay? So it looks like we get a bit of a mitigation and we jump ahead a bit on the 4-hour chart. So I'm just going to bring it back a bit, and let's jump down to our medium time frame. Now, there is inducement, like we said, now in front of this to the left, but we need to drag across where that inducement actually is, so we know if we're using that or not, or if we come down, right, and then we don't come up and actually take out the PBL that causes this liquidation, but we get an entry model down here, then we need to see strong, we need to see our liquidity entry model in the lower time frame down here, right? Because we haven't yet broken the PBL that causes the break of that low. That's how you know if we're actually using this inducement or not. So that makes more sense as we jump down, okay? So M15 coming into our 4-hour POI, that's the low that potentially could be used as inducement. So what I was saying was, is if price comes down and breaks that, okay, we don't have our entry model until we get the PBL fail, right? The point before the liquidation. Where's the supply that actually caused that liquidation? It's only once that goes that then we can say we've used that as inducement, and then we can look to get involved, because we have to be sure that the sell side liquidity, right? Below that, that gray line has actually been used. The way we define that is if the supply that caused the liquidation first goes, okay? So let's play this forward and see what happens as we come into our 4-hour POI. Okay, we get the 4-hour mitigation. So again, if you want to be super mechanical, which is slightly aggressive, but if you always hit the nearest one, that would be your PBL in this case. So if you want to know if the BFIs are using that 4-hour structure all the way to the left, right, you want to see this fail. So holds for a bit, and then we push up, and then we fail. Okay, so that's a good sign that they're potentially, you know, using the liquidity. But what else do we need? We need structure to shift, and the chalk is all the way up here. Okay, so I'm not doing anything until we get structure at least shifting in our favor, and then we get a big movement to the upside. So that was a bit quick, but you can see the PBL failed. So that's a good sign. We've swept the 4-hour liquidity, the 4-hour inducement into our 4-hour POI. Okay. And then we came down and we actually swept the liquidity just about. If you look at the low, what's the low of that candle? 83.4. The low of that is 83.3. So yeah, it swept it by 0.1 pips. So it's a subtle sweep, but it's there. And then look at that overwhelming imbalance between supply and demand. So if you weren't sure against all that momentum, what do you wait for? You wait for a clear shift in structure. And now, you know, there's only really one POI in which you can enter on. There's nowhere else. Okay. So in terms of entry models, again, this would probably be, let's see. Yeah, we didn't get a strong liquidation on the way back because all of this is just bearish structure, right? We just come down, that's weak lows, that's weak lows. But what we used in this time was actually liquidity entry model 4, where we got, sorry, it wasn't that, it was this one here, higher time frame leg inducement entry model 1, right? We had that 4-hour inducement to the left, but to know we're actually using that liquidity, that's that orange line coming across. We need to identify the PBL, the point before the liquidation that caused that liquidation, and then we need to see that fail, and if it flips, we can take it. If there's no flip, but we just get a break of it, where do we enter? We enter on the extreme, right? The demand that caused that. And that's what this is, entry model 1. Okay, like I said, we can refine these entries, but for now, we're just gonna enter on the edge. And then because you are entering at literally the 4-hour extreme, if you are gonna, you know, take those much bigger targets, technical targets, this is when it can make sense to target the high, because unlike when you bought here, right, there was always cause for lower prices. There was always potential price could come lower. Whereas this time, if this 4-hour swing structure is going to hold, this is the place. And that doesn't mean you have to target every time. We'll talk about this a lot more in management, but this is the time in which it can make sense to do so if you're someone who wants to target those bigger trades, okay? And there you go, nice big reaction from there, and away. So reasonably simple setup, even if you didn't be paying attention, even if you weren't paying attention to liquidity concepts, right? We pulled into the 4-hour extreme, nice strong reaction away, shift in structure, enter on the extreme, right? It's relatively simple, but having that deeper understanding of liquidity concepts can give you a lot more confidence of when to get in, how to get in, and in times when maybe you're not quite sure if it's quite ready yet, it can help you to either wait or no, it is ready. I've got the liquidity sweep that I need, and we can get involved, right? So they're just 2 examples, and you can see now how, like, you know, we can understand it here with the line diagrams, but every time it's going to look slightly different. And sometimes, like the first one we went through, there can kind of be a few different ways in which you can look at it and add different confluence to it. So what we're going to do in the putting it all together module is we're going to go into this in even way more depth. We're going to go through tons of examples, but you'll see that we're just applying the same framework again and again and again. And yeah, you'll really see kind of how that plays out. So without further ado,